Good morning, everybody. Thank you very much for joining in. This side, Rahul Magan here as the Chief Executive Officer of Treasury Consulting LLP. And as you know that we are always ready to present fresh videos to our subscriber on the YouTube channel. And today, what we are doing, we are presenting a very good video to our YouTube channel, which is on the technical analysis of the GBP, Great Britain Pound. As you very well understand that lot of talks or lot of action which is happening in the market pertaining to GBP, Great Britain Pound. In fact, foreign exchange market himself is going highly volatile in nature, and it is next to impossible for the portfolio managers to accurately predict where the things would be. If we carefully examine the statement which is given up by the PIMCO, which is the largest bondholder of the fund, few days ago, PIMCO clearly specified that almost hedges which PIMCO had taken in the currency market, they are in the losses. And PIMCO clearly mentioned that it is almost difficult for a hedge fund to predict where the currency would be going. So currency volatility is one of the very important reasons, which is something which we need to consider very seriously. At the same time, we should also evaluate same time we should also evaluate the fact that especially when it comes to GBP, Brexit will play a very important role. As regards the media is concerned, people clearly said that Brexit would be applicable effective May 2017. I sincerely doubt that we need to wait till at least another 6-7 months, and then we need to see probably what would be the impact of the Brexit on the GBP. The impact is clearly visible now. How? If you carefully see that the GBP has fallen to approximately 1.27 level, and Treasury Consulting LLP, who is also running a foreign exchange desk, clearly predicted that GBP would fall by at least to 1.26 level. Please note that we are not talking about the GBP of Federal Reserve. We are not talking about the GBP when the Federal Reserve decided to increase the rate or decided to decrease the rate, because this is something which has already been passed, and this is something which would be coming probably, I would say, January 2017. Till then, things are very silent. But as regards the Brexit is concerned, things are moving in the negative direction for GBP. Now, if you carefully see this chart, which is right up front you, if you look at this chart here, which is here, where I am pointing it, you will get to know this is approximately November 2014, where GBP was at the highest, which is 1.71. In fact, I still remember my days when I was doing my MBA, Masters in Business Administration. At that moment, GBP used to trade approximately 2 per dollar. So when we studying the foreign exchange, we used to believe that if you are having 200 sterlings, it means you are having approximately $400. But right now things are a little bit on the other side of the game. But nonetheless, this is part and parcel of the foreign exchange market, which would surely happen. So what did happen is that GBP has consistently fallen over the period of time. Yes, in the last, I would say, when Federal Reserve decided not to increase the rate, or people are having some kind of speculation about the capability of the Federal Reserve, GBP would have risen by a few bips, which you can see here, because effective here, which is approximately 2015 April, it went to 1.45, and when the Federal Reserve said that he is not interested in rising the rate, or there is small speculation in the market about the capability of the Federal Reserve not being able to hike the rate, then what did happen that GBP risen by 1.51 levels, 1.45 levels. But one thing which we certainly need to understand about GBP, that GBP and Euro are the most volatile currencies of the globe, and GBP and Euro can swing by even several big figures in a day. Now, what do you mean by big figure? A big figure means 100 basis point. So if today GBP is trading at approximately 1.27, right, and it will swing to 1.28, it means there is a change of one big figure. And if it moved to 1.26, yes, there is a change of one big figure, but the difference is that if it moved to 1.28, then it means that it has appreciated by one big figure. On the other hand, if it goes down by to 1.2, since it has depreciated by one big figure. And that has happened. That has happened because we should not forget that the day when the Brexit got announced, Brexit got announced roughly at 1.42, which is here. And from 1.42, GBP reached to the historical level of 1.32 on a very same day. On a very same day. Now, in the same day, GBP swing by almost 10 big figures, because I still remember on the day of the Brexit, it was trading at approximately 1.42 and 4243, and immediately when the results came in and people confirmed that yes, that the UK really wanted to get exit from Brexit and from Europe, from European Union, it went down to 1.32. Now, at that moment, it went by 10 bips on an expectation that things would get settled down in the near term. Then the David Cameron pitch in. David Cameron resigns from the parliament as the prime minister of the country, and he clearly acknowledged that the command would be taken over by the leader, who would basically it would be taken over by the leader who would control the UK after the Brexit. The opposition party leader, I don't remember the name of that gentleman, but the person who was behind the Brexit, he resigned from that party, and he was not interested to act as a member of parliament, to act as a prime minister of the country. Slowly, the talks emerging in the market that UK might not be able to sustain the benefits of the European Union, although UK is trying very hard to sustain the benefits of the European Union. But nonetheless, now these talks are growing at a very fast pace. And if we carefully examine the words of the Prime Minister, which she gave approximately, I think, 2 to 3 days ago, she clearly told that at the time of the Brexit, if I need to bifurcate the industry which are going to be a part in UK or which are not going to be the part of UK, I will not give a special emphasis to the banks. And this is, I personally feel, one of the wrongest statement being given up by any prime minister of a country who is also acting as a offshore treasury center. We should not forget that the London is acting as an offshore treasury center, and London is doing a phenomenal job as an offshore treasury center. And in fact, we need to appreciate the fact that if today, because New York is completely dominated by China nowadays, that we need to appreciate. China is already a part of SDR now, 1st October 2017. London is still holding a very good substance in the, I would say, in the offshore treasury center. If I would say I need to list the 3 offshore treasury centers, I would simply give first emphasis to Singapore, then London, then Luxembourg, Frankfurt, to an extent Finland also, but it is not yet confirmed that whether Finland would be able to cope up with the so much competition we are having in the financial center. So now what we do, that if the Brexit would happen and the Prime Minister won't give a special emphasis to the bank, then London would lose the status of the offshore treasury center, which somehow I might feel that they are losing because of the political will. Now the business will move away either in Singapore, who is always ready to take up the business, it will go to New York, and it will go to other countries who are desperately to be a part, to wanted to act as an offshore treasury center. But that would decrease the value of the GBP, and that would bring the UK economy into a recession. I am not saying recession, it might be a technical recession. In the sense, like, if I am a British exporter, assuming I am a car maker in London, and I am exporting 10 cars every year. Now the value of 10 cars is 100,000 GBP. Now 100,000 GBP is currently trading at 1.27 GBP per dollar, which is approximately $1.27 per GBP. So 100,000 cars would value approximately $1,27,000. When I started making it, probably I would say a few weeks ago, it was at 1.42. So it was 100,000 GBP was $142,000. Car has not yet done, and my valuation of the car or my exports were reduced to $127,000, which is approximately a loss of 15,000, which is also known as the foreign exchange exposure. Now that foreign exchange exposure is going to hit. Now what we can do, we can hedge that. We can hedge that. It could be forward contract, it could be option contract, it could be other way. But I don't think this will solve the purpose. Why this will not solve the purpose? Because we need to appreciate the fact that first of all, the company, because the foreign exchange volatility is growing at a at such level that it is almost next to impossible for any bank, any financial institution or any hedge fund to be seriously understand that which way the foreign exchange market would go. It is next to impossible. It is not very easy for you to predict that where it would go. And also at the same time, if you don't hedge, then you are gone. So probably the concept of hedging is changing nowadays, and I don't think that hedging is bringing money for the corporate treasurers, but nonetheless they need to take their call. And if you look at the chart, in the chart downside there is a MACD, like you can see here. It clearly suggests that you should sell. I might not be surprised that looking at MACD that GBP will go to 1.25 also. Of course, we need to see and we need to check that how the hedge funds across the globe would come forward, how they would take up the call, how they are going to buy, and what way. We don't know how the things it would be. But at the same time, we need to appreciate the fact that sitting today, if we carefully look the technical analysis, then GBP is a great sell call. Yes, at 1.26 it might be a buy, or maybe probably 1.25 it might be a buy, but I'm not sure about it. But sitting today it is a sell call. So what we do, and we are just going to change the chart to the candlestick charts. Here we go, just 1 minute please. Now we are going to make it to candlestick charts. You can very well see this candlestick charts. This is the point where GBP has started fallen, and this is the concern of the Brexit, and Brexit is sincerely a big concern. If you carefully see this chart, effective here, I would say effective here, which is 2015 June approximately, you can see that GBP was 1.59, roughly 1.59 dollars per GBP, and today it is 1.27. So it has fallen by approximately 32 basis points from June 2015 till today, which is approximately I think 1 year, and so it has fallen more than 32 bips. 32, sorry, not bips, 32 big figures, which is a big change. Correspondingly, if we look at the chart of the euro, which we are not presenting right now, if you look at the chart of the euro, then we will get to know that things are not as tough as you have in euro, because euro is something which is stable. Of course, there are a lot of issues in euros also right now. Germany is facing a lot of issue. Deutsche Bank is facing lot of issue. Deutsche Bank, there are a lot of talks which are happening in the market which clearly suggest that Deutsche Bank is cooking up their derivative book. They are booking the notional gains on their derivative book in their P&L, which is an opportunity cost. There are a lot of talks which are happening, and there are a lot of talks which are happening about the contingent convertibles also, which is basically hitting the Deutsche Bank. And there are a lot of talks which are happening that sooner or later all these contingent convertibles, which is shortly known as COCO, would convert into equity. And we don't have any information as a company that whether these contingent convertibles are basically they would straight away convert into equity, or they would have any write down as well, because the convertible clause of because contingent convertible clause is of two types. Sometimes it would convert into equity, sometimes they have a contingent clause also. They have write down clause also. So we don't know how it would move. But euro correspondingly is moving good, and it is trading at approximately 1.11 levels right now. On the other hand, the GBP, and I think that from the last 3-4 months the euro consolidated its position very well, very nicely, and not just one or two big figures. So it has moved in the range of one or two big figures like 1.11 to 1.13. Of course, we don't know how the things how when the things would turn up or turn down, because Doge is still in a mess, and we really don't know that how Doge would perform. And because if the Doge would crash, and especially in the Europe and all the three big banks of Europe, which is Deutsche, the Commerce Bank, and your so-called ING, they all announced the job cuts. So this would surely would have an impact on the GBP and the Euro as well. So currently GBP is a pure selling call for our traders. We would always also appreciate this fact, and our view is that GBP would to an extent trade approximately 1.25 levels, and from where we need to see that whether it would be able to hold this 1.25 levels or not. If it might not be able to hold 1.25 levels, then of course the fall in the GBP is imminent, and it might go to 1.23 or could be 1.22, from where we need to see that how Bank of England and is coming and doing intervention in the GBP market, and making sure that able to save the GBP. So GBP is a very interesting, always a very interesting currency, because it is changing. It has, along with the euro, has the capability to change even by several big figures in a day. So with this, we would like to wind up the video, and we would like to stress the fact that if you are an exporter who is holding the GBP, then you should be very careful. And this is not a good news for Indian IT companies, because Indian IT companies are having I think 38% or something exposure when it comes to Europe, and at the same time they are not moving very good in terms of Brexit also. So Indian IT companies are in little mess, in the sense like first of all their exposures in Europe is getting down because of the fact that Brexit, and consequently they are not being able to mint money on their receivables also, because GBP is trading at 1.37, 1.27. So both ways the Indian IT companies are losing, and I think probably I would say that whenever the September results would come, this would surely would have an impact on the results on the Indian IT companies. And let us see how the things it would be. But GBP is a good call, and traders are advised to be very careful about the GBP. Things can move in any direction, and I would say companies are also advised to take a strategic call on the GBP, how to hedge and how not to hedge, which all derivative instrument to be considered while hedging the GBP exposure. With this, we thank you very much, and we love to see you soon. And our next few videos are very interesting. We would be covering another video on Australian dollar. Probably in this we would be covering that the impact of the Australian dollar on because of the currency, because of the interest rate decision by Reserve Bank of India. We sincerely thank you very much for your time, and we love to see you soon. You know our contact details. Our email is rahulmagan8@gmail.com, and my mobile number is 9899242978. We thank you very much, and hope to see you soon. Have a great time ahead.